Hello everyone, my name is Alexander Love, and this is my Lakeforest Mall Market Analysis. The purpose of this study is to not only do a deep dive into the site itself and the highest and best use that we would like to see for this development, but also do a deep dive into the office, residential, and retail markets of Gaithersburg City and Montgomery County. We also want to take a look at the possible mixed use in this area because of the given size and predicament of the situation. So a little overview of what I'll be covering, specifically about the site, is that it's over 100 acres and located right off of Interstate 270. The site itself has some natural boundaries that could prove to be difficult to work around. However, I believe there's some other opportunities there. Currently in the office market, we are dealing with some outdated and vacant inventory, as well as some slowing employment in some sectors, but we have seen some growth in others. So we would like to focus on those markets. Now, we are seeing a younger demographic base and lower vacancy rates. So there is an undersupply of rentals in the area, and we would like to capture some potential of that market. Now, we'd also like to see a little bit more retail, not quite to the extent that the current mall is at based on the GAFO, but focus more on neighborhood grocers and food and beverage, but also the entertainment sector and evenings out. I'd like to expand on more of that later, but this site provides a unique opportunity for a mixed-use development. The current site sits at 701 Russell Ave in Gaithersburg, Maryland. It sits on about 102.4 acres, and the original Lakeforest Mall was built in 1978, which was right during the expansion of the city. Now, I believe that led to its success for many years. However, due to declining markets and the inability to change, I believe that led to its demise, and I think there is room for development there. The property itself is located off of a major arterial highway of Interstate 270, which is the interstate that allows its access to Washington, D.C., which is located about 23.9 miles away. The property is also located at 41.5 miles from Baltimore, and so between these two cities, I believe it has great access, and I believe we can, capture some of the audience, as well as, provide homes to some of their consumers. The property itself has some natural boundaries that, inhibit the property and actually prevent some good visibility, and I'll discuss that further and how we can better utilize that. The mall is also centrally located on the site, and there are currently 6 ports of entry. So these are current views from the surrounding roads of the site. There is obviously some green space, which is good, but the green space acts as a boundary rather than an invitation, and I believe we can change that with this new development. There's also a very clear lack of visibility to the building. I think we should really push the boundaries of where this development starts and ends, because currently there's, many parking lots, and I think we can restructure how cars and patrons access this property through redevelopment. So these are the zoning and public transit maps for the site as well as the surrounding area. Now, if we take a look at the zoning map, you can see that the site is currently zoned C2, which stands for general commercial. And this is meant to include all commercial uses that serves the regional and local area. And the purpose is to create a compatible and cohesive, attractive shopping and office area. And this is to allow anything from hospitality, indoor amusement, medical even. However, the current zoning does not allow residential. And I believe residential would be a key part to redeveloping the site. And so I do believe we need to speak with the zoning board about a special use permit. This will allow us to attract more investors and to provide a good security for our lenders as well in order to fund the site and redevelopment. Now, if we take a look at the public transit map, there are currently 7 bus routes that surround the property, which gives it great access to the current community, as well as 2 Metro bus rides, which serve a more regional basis. And I believe that this already is a good infrastructure for current tenants and current rentals and owners for the property. It is currently located about 15 minutes away from the nearest metro rail station that will give it access to the DC area. But I believe, given the current infrastructure, I believe that there is a great appetite for public transit. Here is my current mapping of my primary and secondary trade boundaries. Now, these are boundaries to help us assess the markets of different product types. The primary helps us a little bit more on the residential side, and this is based on a 10-minute drive time, while the secondary trade boundary gives us a 20-minute drive time boundary, and it is a little bit more focused on specific retail, mostly GAFO, but also office space as well. On the office analysis front, we notice that there is a surplus of inventory. However, most of the product out there is dated. Currently in the county, there's about 15.6 million square feet of office currently existing, with an additional 5.2 million square feet proposed for development. Now, of that 15 million, 27% of that inventory resides in the Gaithersburg submarket at about 4.2 million square feet. Now, for the whole county, there's about 2 million square feet of vacancy, which led us to a 13.1 vacancy rate. However, within Gaithersburg, it is much lower, at about 11.3% vacancy, which does tell us that there is room for development in the county. The region itself had some slow absorption due to excess construction between 2002 and 2013, and a net addition of 11.1 million square feet had been delivered with that time, with 7.7 million being absorbed. Currently within the inventory, the average building date was built in 1992. So as you can see, there is room for new development in the area, especially considering that most of that development had been built for government agencies. Now, during the 2008 crash, the government decided to restrict expansion within its office sector of agencies, and so we've seen a deep decline in the rental rates from those agencies. However, we have seen a grow in both tech and STEM sectors, considering that the National Institute of Standards and Technology is nearby. So within a 5-minute drive from the property, there's about 1,300 businesses as of 2019, with about 16,000 eligible employees. There has been some growth in Montgomery County, however, it has slowed. But in 2007, the professional, scientific, and tech services industry increased by about 17%, but is slowing down to only 14%. That also applies towards finance, information, and company management jobs, sitting between 17 and 20%, compared to 5 years ago, which was closer to 18 to 22% growth. Current trends that we're seeing currently are that the square foot per employee is going down from what was 250 square feet to about 180 square feet. And this is telling us that there's going to be a change in lifestyle and work life for these employees. What was a traditional office cubicle and private office is now turning into open layouts and creative office space. And this square foot per employee isn't without losing any employees in the process. What we're also seeing is Montgomery County itself return to its old employment numbers before the 2008 crash. However, the employment growth has been slowing over the couple of years. Although we are seeing that the current supply isn't meeting tenant demand, because there's about 91 of the proposed development, 91% is pre-leased. And so this is telling us that there is a demand for office in the area. Gaithersburg itself also does have lower rental rates, sitting at about $22 per square foot, with the average of the county at $26 per square foot. So we have the opportunity to develop some newer office styles and gain a larger per square foot price point. We're also noticing an abundance of single-use office parks in the area. The closest would be the Quince Orchard Road cluster. There's about 27 office buildings in the park, with about 2.7 million square feet of office space. and is only currently 5.4% vacant. So there is room in the market for office to be developed, and I think we have an opportunity to develop to meet the new demand of the emerging tenants. And I think this kind of comes down to a more creative flex office space. Flex office can provide us with tenant space that is for the new emerging tenant, whether that be a tech sector or STEM sector, or architects, anything. But the space itself can also be altered to fit more retail demand or housing demand in case office demand is low. I believe that's going to provide us with the flexibility that we need for the future. And I believe that with the current development of the site, I think we should do it in phases. And I think the office, once we can find a tenant to pre-lease the space, I think would be ideal for development. So with residential analysis, I want to do a bit of an overview of the demographics. We're seeing a larger population growth closer to the site. Within a 5-minute radius, we've seen a growth of about 14% over the past decade. And as we travel further away, 10 minutes and 20 minutes, we see closer to 11 and 10% respectively. And so if we take a look at the population by age, we're also seeing most of this growth coming from the millennial age group, age 25 to 34, and a little bit older, 35. And so most of these families, or couples, if you will, because the average household size close to the area is much lower at about 2.57 people per household, and then it grows to 2.8 at 10 minutes and 2.79 at 20 minutes. And so it's a younger and more single population closer to the site, and this tends to gravitate towards more rental units. We can also see that the average household size is increasing at a slower rate than necessary to match the growing population. Within 5 minutes at about 11,000, and 10 minutes 50,000. But recently it's been closer to 12.7 thousand and 55,000. So we need, like I discussed before, there's a younger, more educated demographic. But there's little inventory to match the need, and we can see this based on current vacancy rates and the number of homes in the area, as well as the home pricing. So the current breakdown, we see a good ratio of 1 unit attached and detached, as well as the 10 to 19 units and 20 plus units. We do see a little bit less on the duplexes and triplexes of the area. However, we do see a lower inventory on the rentals of studios. Vacancy for most of the comps sits at about 3.2%, which is fairly low, and I think that gives us room to expand on the rental units on the site. And the average monthly rent is sitting at about $1,436 and shows a solid growth of 2.6% on a 5-year annualized basis, based on the region average. However, there is quite a low inventory of studio apartments, and given the rates that they currently go for per square foot at $260, which sits at $1 more than the 1 bedroom, I believe we have an opportunity to capture some of the population growth of the area, especially considering that they are younger and single, considering that there is a lower per person household. Now, the homes in the area, the median home price sits at about $361,000, $361,000, which is higher than the state average, which sits at about $308,000, and the national basis at about $243,000. So this is a middle to upper class area, which tells us also that there's less homes, more spread out, gives them more distance, and so we do need to match in the inventory with this basis. Here are some comps of the current multifamily housing of the area. The current submarket, the inventory is kind of outdated and doesn't quite serve the needs of this growing population and potential customers. The old 70s and 80s style of apartment used to work during the growth of Gaithersburg, back when it was much more focused on the drivability of the city. But now renters prefer more walkable communities and a variety of amenities. So what we do see is higher prices for more amenities, and I believe that with this given site, if we provide the given amenities with both ease of access, but swimming, tennis courts, gyms, and provide great retail access to the community, I think we can drive higher rates up, especially in both the studio and one bedroom inventory, considering that of the current comp set, there is only one that really gives studio apartment availability and only 14 exist. There is a higher demand for smaller units because the studio apartments only represent about 0.9% of the inventory, and they sit at about $260 per square foot over the other $1.55 per square foot. And so with the rent growth over at 4.3%, I think we can capture a good portion of these customers. When it comes to retail analysis, there's currently 5.2 million square feet of retail inventory currently in the market. And this has housed primarily between 31 different shopping centers that range from general retail, community centers, lifestyle centers, neighborhood centers, etc., with the closest being Montgomery Village Plaza and Gaithersburg Square. Now, both are community centers that have an anchor grocer such as Trader Joe's or CVS, respectively, but there's also some larger big box retail centers located around the site or nearby, specifically a Sam's Club on Frederick Ave as well as a Costco. Now, if we take a look at this chart, we're seeing this is total retail expenditure based on the total volume as well as the expected 2020 expenditure as well as the average household expenditure. So we are seeing about 63,000, which is a little high, but this is spread out through anything from groceries to restaurants, GFO-style retail, as you can see here, through electronics, appliances, etc. What we're seeing is a heavy expenditure on both food and beverage, and this is both in grocers as well as eating out and dining out. And we're thinking there's a transition in styles for people to not only cook in, but also go out to restaurants and dining bars. So like I discussed before, we're seeing a transition from the traditional GAFO style retail to more of evening and event retail, considering the current expenditure on restaurants and bars. Gaithersburg also has a lack of unique and event style of retail. We have some in Rockville, but the buildings that they're currently housed in is outdated. And I believe there's an opportunity to capture some of that retail space. So the current incomes of the population does allow for greater evening excursions, and then with the expanse of e-commerce, we'll be transitioning away from typical department stores and transition towards more e-commerce style of GFO retail. Companies like Bonobos, how they have online shopping, but they're guest stores where you can try and check out styles, but also how Amazon has just made it easier for people to get access to the products that they need. Currently in the county, there are only a couple developments pre-approved for some retail. Right now, there's only a 30,000 square foot grocery store nearby, as well as 3 5,000 square foot detached retail centers, and I'm presuming these will be for restaurant stops. However, I do believe we can capture a good, healthy 140 square feet to be captured with all, product types across the board. That's anything from grocer and restaurants, but also some GAFO, considering that the Lakeforest Mall was a large GAFO-style retail center. So I do think there is plenty room for some of that type of product. I believe this site is an excellent candidate for a mixed-use development. Each product type is very cyclical in the real estate market, and I believe that a mixed use can generate proper cash flow, as well as attract very high-profile tenants of both office, retail, and residential sectors. It also will allow us to redevelop the property and centralize the green space instead of creating the natural barrier that the current Lakeforest site currently has. Single-use development is also on the decline. Office tenants want to be able to access good lunch spots, but also tenants want to work in a live, work, play lifestyle. And so if we can give them that opportunity, we can charge higher rents and give them the spaces that they need. Also, considering the current climate of the virus, I think it is better for outdoor green spaces and walkable spaces, and it gives us an opportunity to expand and redevelop the city of Gaithersburg. I do believe that each sector can be housed in this development. Both are all three of office, residential, and retail. Like I discussed earlier, retail is moving away from GFO and more into the restaurant and event style of entertainment retail, and so I think we can capture that, especially if we have townhomes and rental units on the site, as well as having some office as well to attract those creative and co-working lifestyles. In conclusion, I think the site would be a great opportunity for a mixed-use development. One of the first steps that needs to be done is that the property needs to be rezoned, considering that residential is currently not allowed, and I believe that that would be one of the biggest proponents of redeveloping the site, is adding a residential complex to it. I believe there's a lack of good updated office inventory, and I think we could capture that as well, considering that there's a growing change in the type of office out there, considering now more co-working spaces and creative office space is currently in demand. There's also a younger population that is seeking more rental units, and currently in Gaithersburg there's a lack of studio and one-bedroom apartments that these young professionals can access. I also believe that the retail sector is changing for the better, changing from the GAFO style of retail into more evening and dining out excursions, and I believe that if we have the retail sector, we will capture greater high-quality tenants on both office and residential sectors. Thank you for listening, and this has been a great experience.